Welcome to Stock Talk with Mike. Jumia Technologies, one of the stocks that I follow quite closely on my channel. They're getting set to report earnings. I believe it's before the bell on Wednesday, February 24th. So I just want to give some thoughts of what might happen and what to expect going into earnings. I like to, on this channel, go into deep dives on disruptive, innovative companies, high growth companies with mostly long-term investing outlook. If you like that kind of content, please consider subscribing to the channel. And it would be great also if you could like this video. On my last Jumia video, I covered Black Friday and some of their other holiday sales data. So that'll tie into this quarter here that they're reporting out on for October through December. So you might want to check out that video here if you haven't already as well. But I just wanted to share some other data with you. So this is looking at their last several earnings reports. So of course, analysts come out with estimates for both revenue and earnings per share going into each quarter. And that is sort of like the expectations, I guess, going into the quarter. And the last three, so all three quarters of 2020 so far, they actually beat on earnings per share. If you look here, less of a loss than analysts were expecting. The last time they missed was actually Q4 of 2019. But you can also see that earnings per share also heading in the right direction each quarter. They've actually been less of a loss every quarter, and that's as they focus more on third-party selling over first-party, which I've also covered extensively in my other videos. So it's a really good sign that they're heading in the right direction. But see, so just remember that though, the last three they beat. But look what's happened here when you look at what's happened to the share price. So this shows the call date and what the price was the day before they reported and the price the day after. And look at the last 4 times that Jumia has reported. So quite the negative result. And it's funny because the stock has done so well and did so well all through 2020 that I actually can't even remember these huge declines that we saw after each earnings call. But apparently, even though they beat the last 3 calls and all 3 calls of 2020, we saw nearly a 20% pullback each call the day after. So that's quite interesting. And again, the stock's done so well that these became a blip on the radar. So that's something to remember too, that often there's a large overreaction, often to the good or to the bad. But in the grand scheme of things, you should really be evaluating these kind of companies, in my opinion, over the long term. So the year that they missed, or the last quarter they missed, February 25th, 2020, their stock actually declined in one day 26%. So massive decline. But despite beating in the first quarter of 2020, they still declined over 20%, 21% decline. So that's something to keep in mind, is that even if they beat, you may see a sell-off. And I think it's largely, again, something I've covered in my previous videos, people not really understanding the change in the delivery model and the effect it's having on top line revenue numbers. So again, I've covered this pretty extensively in my previous videos, so if you haven't checked those out, you might want to, but it's this change in delivery model away from first party selling that I think is going to come into effect here when they report in Q4. Now remember, I am a Jumia shareholder. I believe in the long-term story. I just got to be careful here heading into earnings if you're worried about short-term volatility in the share price. I think we could see some of that here in Q4. But again, I think it's just something to be aware of. If you're a long-term shareholder, I don't think it's anything to worry about. But if you're wondering why it sells off, this could be why. Because there is a lot of conflicting views on Jumia and their decline in revenues in 2020. But it was largely as they moved away from this first-party revenue. So this line here where I've highlighted in yellow. And this is looking at their Q4 report from 2019. So same time 1 year ago. And still, at this time, they still had pretty significant first-party revenue of 23 million. And this is in euros, keep in mind, so it's a little bit off. And commissions were 8.4 million. So that first-party revenue line was their biggest source of revenue in Q4 in 2019. But they've actually been significantly declining their first-party revenue intentionally because it was really bleeding a lot of cash and not profitable at all. So their earnings per share is improved as they're getting closer to profitability as they focus more on commissions from third-party selling. But that's not reported as of large of a revenue in their quarterly reports. So you have to keep that in mind because they're just recording the commission. And I've explained that as well. But so if you look here, this is for the last quarter. Look at their first party revenues, only 9.8 last quarter. Now keep in mind that Q4 is their biggest quarter with the holiday seasons and everything else and Black Friday. But they saw last report, Q3, they saw 53% decline year over year that quarter in first party revenue. And because Q4 first party revenue of 2019 was quite high, I expect to see similar in 2020. You're going to see a big decline in that first party revenue. And what that's going to result in is look at the top line here in revenue. See, last quarter, they reported a decline of 17 million. You're going to probably still see a year over year decline in revenue. If not, great, but I think it's very likely as they've shifted away from first party revenues. So I think that's still going to come into play here in Q4 as it was more around the first quarter of 2020 that they kind of made that shift away from first party into more third party selling. So again, it's almost semantics in a way because it looks like a decline in revenue, but when they report revenue from third party selling as commission, they're only putting that commission amount on the revenue line. And I've explained this before, but basically if they are selling as a first party seller, if they're selling a vacuum for $100 on their platform, even if it costs them $150 to sell that vacuum, they report the whole $100 as revenue, right? But it would be a loss of $50 net overall. But with commissions from a third party selling, the revenue line, even if they're selling that vacuum for $100, only the commission piece goes on the revenue line. So if the commission's $10, that's what goes on the revenue line. So it might be more profitable than when they were selling first party goods, but it's going to come across as a reduction in revenue. So people see that top line revenue number and they panic and don't understand what's going on, but they don't take the time to actually read the full report. So I caution you, I obviously I don't know exactly what they're going to report, and I do expect holiday numbers to be really good, but I think this shift to third party is still going to confuse a lot of people when they announce, and year over year revenues maybe not look that good or be slightly up or even negative year over year. But we need to look at that deeper number. And of course, I plan to do another video after earnings, kind of analyzing the earnings a little bit. But I wouldn't be surprised if there's some volatility given just every earnings report in 2020. We've seen massive pullbacks in Jumia, and obviously it's quickly recovered because 2020 was just a phenomenal year overall for Jumia, despite these 20% sell-offs after every earnings report. Good news is I think this confusion is going to be behind us as we get past this last 2020 report, because in Q1 of 2020, you look at this yellow here, the first party revenue was only 9.9. So that was significantly less, right? And year over year, that was a 36% decline. So I think we're going to have much better comps year over year with this new delivery model once we start looking at 2021 numbers. But I wouldn't be surprised if this last quarterly report of 2020 still wreaks some short-term havoc. But if you believe in the long-term e-commerce growth and technological advances in Africa like I do, then if anything, the volatility that we might see after earnings would just create a real buying opportunity over the long term. So we have to keep in mind as well that Jumia share price appreciated over 1,000% in 2020. So there's a lot of people that made a lot of money in Jumia that want to protect those profits or maybe ring the register. So that can often add to volatility after earnings if we see the share price going down. I've purchased shares of Jumia as low as $4.05 a share, and that position has gone up at the all-time highs to over 1,500%. It's actually been my best performing stock to date. And then I've also purchased shares up to as high as over $16 a share. So what I've done though is I've actually taken some profits along the way, even though I'm really bullish over the long term for Jumia, because I just want to keep that position properly weighted in my portfolio. I don't want it to be the largest position in my portfolio. I want to keep it around a 5% weighting. If I saw Jumia sell off really hard, if we saw it ever get back into say the 30s, for example, I'd probably start looking to add back additional shares. I'm really looking at Jumia as a long-term play. I'm not too stressed myself over short-term price movements. I have no idea what the stock is going to do this week after earnings. I just know what we've seen in the past, so I wouldn't be surprised to see a big sell-off again. I'm looking at this as one of those companies that I just think is going to be much, much bigger than it is now, 5 to 10 plus years from now. I'm kind of looking at it from that view. So I'm really not too stressed about it. I want to continue to hold. I'm not going to try and time the market on this one. Like, I'm not going to go all in or all out because I don't want to miss the ride on any upside potential. But I definitely going to continue to trade around my position a little bit and manage my risk that way. So I'm totally comfortable if my holding goes down in Jumia, goes down 20% this week after earnings. I'm totally comfortable with that. I would look at it as an opportunity to add some additional shares back in there. And if it goes up, great. I'm glad I'm participating and I'm still holding shares, because so far, over any decent length of time, shareholders of Jumia have been rewarded. Even though we've seen some very short-term periods of volatility in there, it's been mostly straight up. So it's gonna be exciting to see what happens with Jumia this week. I plan to do another video after the earnings report covering my thoughts on earnings. So stay tuned for that as well. Thank you so much for watching. Happy investing.